Welcome to Biz Help for You with host Candy Messer. Entrepreneurs like to focus on the big picture, like profitability, success, and a smooth-running organization. But there always seems to be those little things like taxes, employee compensation, laws, regulations, and more. Now you can get the answers you need in one place. Join us today as we break it all down for you. Now, here's your host, Candy Messer.
Hello and welcome to Biz Help for You with Candy Messer. Thank you for joining me today. I hope you enjoyed the topic of my last episode. If you were unable to join me and would like to listen to the show, links can be found on my YouTube and Facebook pages, as well as multiple favorite podcast platforms. If you'd like to receive notifications on when my podcasts have been uploaded, please like and subscribe. Today, I want to share tips on year-end bookkeeping and payroll tasks to help you be prepared for the end of December and the start of the new year. So let's start first with year-end bookkeeping. If you are not regularly having your bookkeeping completed, now is the time to do so. In order to be prepared, make sure to gather the information to do the work yourself or send to your bookkeeper. Some things that you will need will include bank statements, check register or check stubs, paid invoices, deposit information, sales information, accounts receivable information, accounts payable information, and information about other transactions such as loans, credit card statements, and any other items that need to be entered to accurately reflect what happened in your business. Now, note there are differences between those on a cash basis and those on an accrual basis. Cash basis means you count the income and expense when money is received and when money is paid. Accrual is when you invoice a customer, you have then earned the income, even if you haven't yet been paid. And when you've received a bill, you've basically incurred the expense, even though it hasn't been paid yet. So on an accrual basis, you definitely need to have the accounts receivable and accounts payable items. On a cash basis, if you don't track that or you don't think it's necessary to have it finalized in order to do your taxes, that's where that difference will be based on how you report. But ideally, if you are selling to customers and tracking your receivables, and if you're tracking what you owe, even if you haven't yet paid it, even if on a cash basis, provide that to your bookkeeper. Review all the information for completeness before handing it over to your bookkeeper, just to make sure that you have everything. It will make the process much more efficient and they won't have to reach out to you to ask for the needed items. They will then be able to reconcile your bank and credit card accounts, record cash receipts and disbursements, update your accounts payable, and adjust entries as necessary. Adjustments to be made to your books might include writing off uncollectible accounts receivable, gains or losses, prepaid asset amortization, depreciation, and internet expenses. Once the information is processed, your bookkeeper will prepare financial statements. Generally, they include a balance sheet, an income statement, also known as a P&L or profit and loss, and a general ledger. And there may be other reports as needed by your business or your CPA. The importance of accurate financial information cannot be overstated. Bookkeeping allows you to evaluate your business as well as make tax return preparation easier. It helps you to determine what's working well as what's not working. Strong and reliable financial records are just as important when dealing with tax compliance checks. I would also recommend not waiting until the end of the year to do your bookkeeping. I know it's hard as an entrepreneur to keep up with everything, but reviewing your financial information often helps you identify how your business is doing and allow you to make needed changes to be more profitable and improve cash flow. Charitable donations. There are oftentimes questions on how to account for things that are donated, whether cash or goods, so that you could claim it on your tax return. So first of all, donations must be made by December 31st to be deducted on this year's tax return. Make sure the donation is to an IRS-approved charity. You'll need a bank record or a written communication from the charity showing the name of the charity and the date and amount of the contribution. Bank records include canceled checks, bank and credit card statements, which should show the name of the charity, the date, and the amount paid. Obtain an acknowledgement for each deductible donation, either money or property, of $250 or more. For all donations of goods, ask for a receipt that includes the name, date of the contribution, and a reasonably detailed description of the donated items. A properly completed Form 8283 must be submitted with the tax return if the amount of a taxpayer's deduction for all non-cash contributions is over $500. If you donate a motor vehicle, boat, or airplane, it is usually limited to the gross proceeds from the sale if the claimed value is more than $500. Form 1098-C or a similar statement must be provided by the organization and attached to the donor's tax return. So now let's discuss payroll. First of all, bonuses. Lots of people love to give their employees bonuses at the end of the year, but often this is not handled correctly. You need to make sure that you are following the IRS guidelines regarding if tax must be withheld on the bonus or the gift. As bookkeepers, we've seen information after the fact where an employer will handwrite a bonus check to employees and no tax was withheld. This is not the right way to handle the paying of bonuses. Bonuses paid for outstanding work are included in income and must be reported on the employee's W-2 form. This must be run through payroll, either with the regular paycheck or processed separately, and the amount is subject to payroll tax withholding. If the bonus given is goods or services, the employee must be taxed on the fair market value. To do this properly, the value is added into the paycheck, taxed as appropriate, and then the gift value reversed back out of pay so that the employee's net pay is the regular gross wages less all taxes withheld. If you give a gift of nominal value, so not including cash or gift certificates, the value of the item does not have to be included in wages. However, if giving cash or gift certificate, it must be included in wages no matter the amount. For instance, if you give a gift certificate to purchase a turkey or ham, that value is taxable. However, if you give them an actual turkey or ham, it is not taxable. The basic rule, if it is cash or something that can be easily converted to cash, you must include the value of the gift in payroll, and that amount is subject to tax. If the non-cash gift given is a value so small that it would be unreasonable for the employer to account for it, it does not need to be included in income. If giving taxable bonuses or gifts to your employees, make sure to notify your payroll company so that it can properly be included in the paycheck and the year-end W-2. Now, if you don't yet have a bookkeeper and would like to find out more about our services, please fill out our bookkeeping questionnaire located on our website, www.abandp.com. We'll review the information and discuss with you what the best options for your situation would be, and we are ready to help you. Now, let's talk about preparation for the new year. If your company is an entity, did you prepare your annual meeting minutes? When creating meeting minutes, it's important that the location, date, and time are indicated in the document. You should also include who was present for the meeting and who is absent. Details of the meeting should also be shared in your meeting minutes with the time the meeting was adjourned. The only states that are excluded from taking meeting minutes are Kansas, North Dakota, Oklahoma, Nevada, and Delaware. Are you thinking of changing your business structure? The best time is for the entity to be formed the first of the year. This means there's no having to run multiple payroll reports for different entities, different accounting files for data for each year, and you can have a calendar year tax filing. Now, what if you want to close your business? Ideally, it can be terminated by the last day of the year to avoid having to pay minimum tax, process payroll and file returns in the new year, and avoid paying for licenses and permits that are required each year. Now, it's time to think about renewing your permits as well. Be sure to file and pay by the due date to ensure compliance. This can include sales tax, fire alarm permits, health department filings, and other types of filings that are required each year. Be sure to check with your location to see when those are due. The Affordable Care Act reporting. If you have 50 or more full-time or full-time equivalent employees, you must process the ACA forms. Business licenses. Many locations require them to be filed in the first month or two of the new year. Any employee notifications, such as for retirement plans, payroll updates, etc. Any updates needed for final estimated tax payments due in January. Thank you for tuning in today. I hope you found this episode helpful and it will help you prepare for your year-end bookkeeping and payroll, as well as looking into what you're going to need for the new year. And I hope you can join me for my next episode. And please remember, you can connect with me on Twitter, Facebook, and LinkedIn, and my website is abandp.com. You can find the podcast posted on multiple favorite podcast platforms, including iTunes, Google, TuneIn, Stitcher, iHeartRadio, and Spotify. And would you please share my show with those you know and leave a review on your favorite platform? I'd really appreciate your support. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.